Welcome to Boring Money, Rich Life. I'm your host, Joy Hicks, and today I wanted to talk about credit scores. I am not a financial advisor, but I definitely just wanted to kind of share some things that I have learned, talk about some mistakes that I've made personally, because I do think it'll help, especially because right now there's a lot of economic uncertainty. People kind of aren't sure if prices are going to increase for goods. There's a lot of concerns about tariffs. There's a lot of people relying on credit and debt and all of these things. And so I thought it would be a good topic. So, one thing to kind of understand about credit scores is that they do fluctuate. So it's not something that's set in stone for the rest of your life. Like, let's say your credit score is kind of low right now. It doesn't mean that you're going to have a low credit score for the rest of your life. It just kind of means that there are some things that you need to work on when it comes to your finances. And then typically, if you're kind of doing well financially, let's say you have a good job, you're paying your car note on time, you're paying your rent on time, all these things, then you might end up having a higher credit score. So that's the one thing that I think people need to kind of understand is that credit scores, they do change. Now the goal is definitely to keep your credit high, because the better your credit score, it's going to be a lot cheaper for you to kind of leverage loans and debt and things like that. Like, you're going to get a lot better interest rates the better your credit is, just because your credit score is kind of like how people, or how financial institutions kind of just judge your ability to kind of manage your money. So, of course, the goal is to have a high credit score. But again, if yours is kind of on the lower side, if you've made some mistakes, it's not set in stone. You can always increase it. It's just, it does take time. So I would say an okay credit score is probably about a 620. Like, you could actually buy a home and definitely purchase a vehicle with a 620. So I would say it's kind of in the low to okay range. I would say once you kind of start getting into the 670s and up, that's when I would kind of say that's more of a good score. You can probably start to get some better rates. And then, of course, a great score is kind of the 740s all the way up to an 800, which is a perfect score. And so, again, the reason why this is important is because if your credit is low, you are going to pay more. So, for instance, let's say that you're looking for an apartment or something like that. If you have a bad credit score, or you have a low credit score, let's say that you're trying to put utilities in your name for that apartment, you might end up having to do a deposit or something like that, just because your credit score is a little bit lower, and it's showing that, you might not be as financially responsible. Whereas somebody who is renting out the same apartment, trying to also put utilities in their name, they might not have to pay any type of deposit, because they've been proven to have a good track record when it comes to paying their bills on time. So a lot of the ways that people get credit is through credit cards, which credit cards can be really good if they're used right. There's cards that'll give you points. I personally like cards that have cash back, because I have my favorite credit card, which will actually give me true cash back that I can just deposit. And it's probably only 3.5% or something like that. But I can actually deposit that cash into my checking account or into my savings account. It is not a point system. It's actually a true cashback card. I just don't like the points, because I don't want to calculate what 52,000 points will get me. It's probably only going to give you a $10 Amazon gift card anyway. So I don't really like that. I rather just get my little $10, add it to my little savings, and do what I need to do. But again, if you are using credit cards, it can be good, because you can kind of use credit cards as a loan. So let's say that you're in the store, there's something that you want to purchase, but maybe you just don't want to use the cash at that time. So you can leverage your credit card. but it does start to get iffy if you don't end up paying that full purchase off within your statement amount. So typically that's going to be like a 30-day period where, let's say, every 15th of the month, you have to pay your credit card balance off. And if you don't, then you're going to get charged interest. Now, credit cards do tend to have the most interest. And I think interest rates are anywhere between like maybe 15% all the way up to like 24%. And so that's definitely expensive if you're just kind of like racking up purchases that you don't plan to pay off, or you're buying things that you really can't afford. And so that's when you start to see people's score get kind of lower. People also kind of build credit with like cars. So a lot of times when you're going to the dealership for the first time, you may or may not have credit. And so a lot of times people will finance a vehicle to kind of start their credit journey. Now, it's kind of the same thing. You're going to get a better interest rate on that vehicle the better that your credit is. Sometimes you can't even buy the car yourself if your credit is either poor or if you don't have enough credit. And that's when you'll start to see people have like co-signers, which is somebody coming on the loan with you who does have enough credit and who does have a good enough score to kind of say, hey, if they don't pay this vehicle off, then I will. Another way to build credit is kind of being added on to somebody else's credit card as like an authorized user. So this is only good if they're good at paying back their debt, because you don't want to get added on to somebody's credit and they're not paying their bills, because again, that'll kind of reflect on your credit. But let's say that you have a very financially responsible cousin or parent or something like that. They can add you onto their credit card as an authorized user, and that'll kind of help build your credit as well. A lot of parents will kind of do this for teenagers. And so that's why sometimes, when a teenager kind of applies for their own credit card for the first time, or their own vehicle for the first time, or even their own apartment for the first time, that, they might already have some credit in their name. But I will say one of the biggest hindrances to your credit score is definitely late payments. So I think when I was kind of younger, I would say like early 20s and things like that, I was probably just like very swipe happy. Like I was definitely swiping my credit card like nobody's business. I had a Discover card that I was just kind of swiping. And I'm great about paying my bills, but there was a period after graduating college that I really wasn't employed yet. And so I was kind of using credit cards to live. And then I was also going on trips and all these different things. And so it wasn't that I wasn't paying it back, it was just that I was paying it back late. And so when you pay back your credit late, that is reported back to the different credit bureaus. And so they kind of track all of your late payments. And that definitely can impact your credit score. And especially for people who have like student loans, right? So I think you guys have probably heard people online saying how like they're not paying back their student loans, and they're going to have to get it back in blood for these student loans, like they're not paying it back. Well, what those people aren't telling you is that their credit is probably horrible. Like it's probably trash, to be honest, because when you're not paying back your student loans, if it's not in like deferment, then you're definitely going to see that reflected on your credit. And I can say this personally. So I don't know what it was about my student loans that just kind of made me so nervous. Like I was so nervous to even just see how much I actually owed. And I was pretty lucky because I only had to take out student loans for my master's. I didn't actually have to do both my bachelor's and my master's for student loans. But that master's degree was definitely expensive. And so I don't know what it was. Like, I just would get so nervous when those loan servicers would kind of call me and reach out to me. And I would like avoid the call, and then I would avoid the payment and all these things because I was just like nervous and overwhelmed. Well, definitely don't do that because student loan payments can be pretty expensive. Like, I've heard of people paying like 500 a month or maybe even like $700 to $800 a month just for their student loan payments. So let's say that you do have a pretty hefty student loan payment. Please don't ignore it. Just call your loan servicer because it's better to do a actual realistic plan. Like if all you can pay is like $100 right now, it's better to give them a call and kind of set up a payment plan with them so that way they're actually reporting some type of payment history than just to say, I'm not going to pay it at all. Because those are the types of kind of hits on your credit that will last and they kind of definitely bring down your score. So I would definitely say it's better to just kind of make a payment plan with them than it is to kind of dodge them and not pay. Because I know for me personally, when I was not paying my student loans, because again, I was just like nervous and overwhelmed, like I just graduated. I'm like, I don't know. So what they did was they kind of gave me a double whammy. So I guess like with the credit score, they kind of track how many days late that you are. So for each kind of month that I was late, they would hit me for a 30 days late notice on my credit. And then they would hit me again if it got to 60 days. And then I think it got all the way to like 90 days. But because I had two student loans and both of them weren't being paid, mind you, it was for the same school. So I guess I wasn't really thinking about my loans in terms of two separate loans. I'm like, no, this is all for the same school. It's all together. But no, I got I got a 90-day actually late notice twice on my credit because the loans were separate. And I forget what type of loans I had. This was like in 2017, 2016. So I don't remember exactly what type of loan it was, but they definitely will hit you twice. So even if you're going to the same school, if you had to kind of break out your loans and then you're not paying either of those back, it looks like two debts aren't paid because technically it is. So that's something that I wanted to share because it was something that was like a big mistake for me. And I kind of had to learn through it. Mind you, I was put into a position where I was able to pay off my student loans. And so thank God I do not have student loan payments anymore. But it was definitely like a lesson learned. And for a while, for like a few years, that was definitely on my credit report. And it was kind of just like bringing down my score. Now, delinquencies like that, they typically take 7 years to kind of fall off. So if you can get ahead of like actually paying on time, you can avoid making late payments, it's going to boost your score so much. And another thing that you can do is never just pay the minimum balance. So let's say you do have a credit card and your minimum payment is only like $100. Me personally, I'll try to pay like $500 or I'll try to at least pay like $250 or something like that because when you're paying those minimums, all you're paying is the interest. So you're not even really paying back what you even borrowed. You're just really kind of paying the interest. So really they're making their money on you, but you're not really getting ahead of anything. So I would definitely say pay more than the minimum, even if it is just like $100 more. I mean, it is best to kind of pay it off as soon as possible, but if that's not something that is possible and you're kind of like climbing your way out of your debt and things like that, at least just pay more than the minimum. So those are just some quick little nuggets about like credit scores and debt that I wanted to share with you guys. I definitely do plan to talk about debt and credit a lot more on this channel. But as always, what is one boring thing that you can do today to start fueling your rich life? Again, my name is Joy Hicks. I'm your host. Thank you for watching and be sure to like and subscribe.